people that grew up in the Web3 world and the DeFi world really are on top of their game. But it's a lot of people in the traditional finance world that still tend to struggle with this a little bit. So if you think about where the future is, 5 years from now, there's not going to be a stock, there's not going to be an option, there's not going to be a mutual fund, ETF, anything that's not in effect tokenized. Stablecoins. 5 years ago, nobody heard about stablecoins. Today, we've got about $280 billion market. And Secretary Bessent had said that two years from now, we'll probably have a $2 trillion market. Ethereum is about 60% of that. So Ethereum's got its own blockchain, and it's got programmable smart contracts that, in effect, can do really complex financial, institutional type transactions, especially overseas, that can be done almost instantaneously today, and that's going to be the way of the future. So 5 years from now, the market that we know it today, the exchanges, 24/7 markets and settlement, et cetera, that's going to be the way of the future. And I'm not sure traditional finance has necessarily quite accepted that yet.
Well, Jim Cramer, I hate to burst your bubble, but it looks like crypto is not going away anytime soon. However, for those of you who believe in the inverse Cramer effect, it does look like the bottom might just be in. Closing out a bear trap, if according to the psychology of a market cycle, looks like we've got some upside potential. But speaking of bubbles, they always do burst, right? And right now we're looking at silver. There's also the same thing going on with gold, but more so prominently with silver. 360 paper contracts for every 1 ounce of physical silver. And this has many people speculating that the value of silver is drastically reduced, just simply multiplying the $53 an ounce by 360 for a $19,000 per ounce price of silver. And while I don't necessarily disagree that the value of silver is downplayed dramatically, it is important to note that bubbles will burst. And when we look at historical trends on bubbles, this applies to crypto, silver, gold, stocks, and everything, all the way back to the tulip bubble in the Netherlands in the 1830s. The 1929 stock market crash was based on excessive leverage through margin loans. Silver Thursday of 1980 is probably the most relevant to this current silver bubble that we're looking at. The Hunt brothers attempted to corner the silver market, driving the prices from $6 to nearly $50 an ounce, and then we saw a major correction in that. Dot-com bubble, housing bubble, 2008, gold, silver spikes, 2011. And it's important to look at what the historical data has to say about the possible outcomes of these bubbles. Specifically on silver, a sharp correction in paper silver prices is a very high likelihood, especially if physical delivery demands increase or market confidence in paper contracts erodes. It needs to be said, though, that there could be a physical silver price surge. That would be a short squeeze, right? The likelihood would be moderate if retail or institutional demand for silver spikes. At the end of the day, the line doesn't go up forever, and we follow the psychology of a market cycle and understand that these are always bubbles. And when bubbles burst, it's called a correction, and you want to be cash heavy at the bottom of that bubble, ready to buy up the dips when that happens. In this video today, we're going to talk about where we are in relevance to the crypto bubble, the rise and fall of Bitcoin, XRP, Ethereum, all of the other altcoins. We'll look at the charts and we will see, are we about to burst or are we at the bottom and ready to run? The rest of the video will talk about epic breaking crypto news, but as always, welcome back to the channel. I am JR, your favorite crypto dad, and you know what to do. Give me that comment 777 down below if you're feeling bullish. If you're feeling blessed and you're ready to live your best life, smash that like button, hit subscribe to affirm it, and let's run into the video.
Do you love crypto, but are you worried about taxes shrinking your retirement nest egg? Here's the deal. Trading and selling crypto can trigger capital gains taxes, eating into your wealth. A crypto IRA fixes that. Per IRS publication 590B, traditional IRA gains like those from crypto aren't taxed until distributed. That's why we've partnered with iTrust Capital, a leading crypto IRA company in the USA, to sponsor today's video. And they offer institutional grade custody for retail clients that want to set up their crypto IRAs for retirement, leveraging top storage solutions like Fidelity, Wells Fargo, and Coinbase Prime to keep your assets secure. To get started, simply click the link in the description of this video, sign up for free, and fund your account with cash. They also offer 401k rollovers or crypto transfers, and you can trade 24/7 with just 1% transaction fees and no maintenance costs. As always, I'm not a CPA or financial advisor, so consult one for tax advice, and we do earn a commission if you sign up using our link below to fund your crypto IRA account, but that helps support value-based videos like this, and I Trust Capital already has over 200,000 crypto IRA accounts and over $14 billion in transactions, proving they're trusted by smart investors just like you. So click the link below, get started now by funding your account today, and let's create generational wealth together.
There is no doubt about it that it appears that we are in bubbles everywhere. Gold, silver, U.S. stock market, U.S. home prices, and even crypto, questioning whether we're at the top and about to burst or we've got room to run. And when you look at the historical data marching out the Bitcoin high to low cycles repeating themselves, we're talking about the 1,064 days from the lows to the highs and the 364 days from the highs to the lows. And we just finished out that 1,064 day cycle out there on October 6th. And it did in fact hit a high on Bitcoin. The question is that it, or are we going to actually have a blow off top, an extended 5-year cycle with that elongated banana curve? People like Raoul Pal talking about that. And the question remains, where do we go from here? There was one other repeating pattern we were waiting to break out, and it just happened in the last few days, and that is the dump before the pump. Back in 2017, we saw the big crypto dump. We're talking about 20 to 30% drops, right? Which is a day in the park for Bitcoin, quite honestly, and the rest of crypto. But in 2017, we saw this, and following that was the 451% pump you can see here on the charts. In 2021, who remembers October of 2021, the big drop. Shiba Inu at the time was blowing up through the entire month. Altcoin and some other meme coins were doing the same thing. We saw the drop pullback and we saw the blow off top after that. 436% increase at the time. Now we're here in October of 2025 at the time of this recording. We've just recorded drops, and again on altcoins and even some meme coins, we saw drops of upwards of 70 to 90%. There might be some exchanges manipulating data. We'll talk about that in a moment too. But if the pump should repeat itself for 2025 into 2026, we would be looking at north of 400%, north of a 4x on things like Bitcoin, as well as the altcoin market, which has a historical pump factor of anywhere from 5 to 250x. What will we see moving forward? There is one thing that came out of this big dump and market correction, though, and that is that we are massively over leveraged. Retail is virtually non-existent, and all trust among crypto degens or OGs, whatever you want to call all of us that have been staying around and never going anywhere for the last 4 or 8 years, have lost a lot of trust, more so than ever, in centralized exchanges. And we are seeing these massive outflows. And just today, at the time of this recording, we saw Binance take a hit with over $21 billion in withdrawals. It's about the same amount of money that was liquidated last Friday in the crypto dump. Binance, feeling the heat, has already started selling Bitcoin just as of today. We're going to jump into the charts and see what kind of an impact, if any, that has had. And other exchanges are even ganging up on Binance for the speculation of market manipulation. I'm not going to sit here and blow smoke. I'm going to report the news as we see it, right? So everybody is innocent until proven guilty, but it does look like Binance, with maybe Wintermute involvement, has been repeatedly making markets. And that's how they all work. That's how the stock market works as well. It's just a lot more transparent when it comes to crypto. So we're going to jump into the charts. We'll talk about that in a moment. The rest of the breaking news is coming out of Altcoin Pro University. The link for that is down below. If you aren't getting an education in crypto, you aren't learning technical analysis or crypto tax mastery strategies, I encourage you guys to jump down there. Even signing up gives you a 14-day money-back guarantee, and I'm sure that in 14 days you could blaze through the majority of these classes. I'll talk about that a little bit more in a moment. Let's go back to the breaking news. We're talking about Fed Chair Jerome Powell yesterday signaling the Fed may soon end that quantitative tightening. So quantitative easing, which is bullish for crypto as well as the stock markets. And Fed Reserve Chair Jerome Powell said that the central bank may soon pause its quantitative tightening program. This is an effort to reduce the Fed Treasury's holdings, slowly remove liquidity from the financial system. And since 2022, the Fed has cut its balance sheet from nearly $9 trillion to around $6.6 trillion doing those buybacks. And Powell saying the quiet part out loud, favoring rate cuts where tariff inflation fears outweigh the weakening job market. If that doesn't speak volumes on bullishness for crypto and stocks, I don't know what does. Now let's take a quick look at the overall markets here and get a quick refresh before we jump into the technicals. On CoinMarketCap, we're seeing that the overall crypto market total market cap is sitting at $3.76 trillion. It has ticked down just a little bit. We've seen those outflows as we just talked about. The fear and greed index is sitting in a fear category at a 37, down from its 39 yesterday. And again, this is just good because it's just like the RSI. The further down we go into oversold means that the further up we need to go into the overbought territory. So we'll look at the altcoin index as well. Altcoin index is rated at a 35, which is extremely bearish for altcoins. I like it. Because the only place you can go from there is up. And the overall market cap for altcoins is not actually down all that much. It's at $1.59 trillion market cap for altcoins as a whole. Jumping into the technicals, we're going to look at Bitcoin first. And I'm going to play with the daily candle chart here because I'm looking at more of a macro picture. Now, there's no reason to jump into the 1 hours or the 4 hours. We're not doing day trade, swing trading right now. Just simply looking at a macro picture to see where do we go. Are we truly about to blow off a new market cycle high for Bitcoin? And if that's the case, we are bouncing off of support currently, which is down there in that 109 to 110 range for Bitcoin. Bouncing off of that, we still need to look at what the highs are moving to the upside, what the potential is for that highs. And so I'm going to shrink this down and just go back to a metric that's tried and true over and over again, which is a simple Fibonacci extension. Guys, we blasted past this past Fib 1618 at 101, and we're talking about last cycle's high. We shrink this guy down all the way. We see a 2618, which would be the next level up, which is $155,000 Bitcoin. Now, above that, 3618 is a 208,000. This is the range where many big institutions and economists are putting Bitcoin for a market cycle high, should we break to that new high. If we don't break to the new high, well, then that just means that the high is already in. October 6th was it, exactly 1,064 days from the market cycle low, following a historical pattern. And if that's the case, we should expect to see a complacency high. After you blow off all the way through the bull run, optimism, belief, thrill, and euphoria, you take this massive correction here, and then you come back up to a complacency high. If you can spot this, if we have already hit, that's saying if we've already hit the Bitcoin high for the cycle, and you can spot this high, you need to see where the retracement is on this. You would know that you've got maybe a little bit more upside potential right now, but ultimately we're entering shorts territory. However, the waves of liquidity crest and they start to flow into the altcoins like Ethereum and XRP and Solana and all the other layer ones. And once that happens, then we start to see, especially with Ethereum, all the stuff that's built on it, the gaming tokens, the meme tokens, and the DAO tokens and everything else. Dating myself there. Crypto dinosaurs talking about DAOs from 2021. And while the jury is still out on this, we don't buy the news and sell the rumors. The fact is there is a lot of crypto legislation being pushed through right now, and we're in a government shutdown here in the United States. That legislation is enough to move the markets, not to mention the SEC filings for the ETFs that are looking to come due at the end of this month. And we're seeing Coinbase scheduling major 4-hour block of time system maintenance on October 25th. We're 10 days away from that. In 10 days from now, we could see a completely different landscape in the crypto markets. Moving into the other altcoins to take a quick look before we jump into XRP, we see that Ethereum has touched off of that $4,000 limit again, but a lot of people in our Altcoin Pro University had their stop losses set at either 4,000 or even just above that, and now they're sitting cash heavy, ready to buy that dip. Yesterday, that was a great scenario that played out. Even Solana, seeing it pull back just a little bit, get this downward trending resistance. Let's throw another line up here. And there we go. Sorry guys, it looks like we could be starting to narrow a little bit, and if that's the case, it just provides that much more of a bullish outlook on Solana, which I am bullish on. I think that at the end of the day, we're still months away from seeing the highs, whether that's November, December, or it's into Q1 of 2026, possibly all the way through 2026, depending on the analysts and the macro pictures that you're looking at. But jumping into XRP, we are failing to break through resistance, and that is going to be right around that $2 $2.60 level. Currently rejecting off of it again for 2 days in a row now, and we're at about $2.40, $2.43 at the time of this recording on this Bitstamp chart that I'm looking at. The encouraging part is that we're holding support above the $2.20, $2.30 range. We haven't dropped down into the $1.96, $2 range. That would be another layer of support further down. We don't want to see ourselves go there. But if we do, I'm encouraged by the RSI trending downward, moving into the oversold territory. And again, we would have to round this RSI back up to the top and cross over the RSI moving average and form that bullish divergence. And then we can make our way to the upside. So looking at the macro, it looks absolutely bullish to me and many other analysts. It's not financial advice, right? Don't buy anything XRP, Bitcoin, just because I'm talking about it. Do your own research, do your own due diligence. But where do we go from here? Are there opportunities to dollar cost average or to swing trade, take that profit and then enter lower? Again, if you don't have an education in place on that and a strategy in place on that, and you can't make money in the spot markets, you should not be playing with leverage, but you should be also learning how to make money in those spot markets or making money while you sleep. And with that, I'm going to say you need to check this out right here.
If you have 10K or more in crypto, you're literally giving up an extra $300 per month in passive income. You're giving up on a free 3 to 8% additional monthly yield just because it's sitting on an exchange like Coinbase or Binance and you're being lazy. You're taught to hodl, just wait for price appreciation, and this is costing you thousands of dollars. So let's see what happens here. While your assets are sitting there doing absolutely nothing and inflation is kicking your ass. For example, Ethereum didn't do anything over the course of 3 months. XRP didn't do anything over a whole year. And Solana, same thing. It didn't do anything for an even longer period of time while you sat there making no money. And I'm not saying that these are bad investments. It's quite the opposite, actually. But the smartest investors in the world make their crypto work for them to generate additional yield. And why would you not do that? You're holding these crypto assets anyways. It's like buying a rental property and not renting it out. If you hold on to the property because you believe that it's going to appreciate in value over years, why wouldn't you rent it out so someone else can pay your mortgage while you still get the value appreciation? So it makes no sense to just hold your crypto without earning yield on your idle coins. And if you're just holding your crypto on exchanges like Coinbase, your assets aren't safe. In fact, Coinbase was hacked for $400 million and the hackers bribed Coinbase employees so they could access sensitive user information, demanding a $20 million ransom from Coinbase, which the company refused to pay.
I want to make you aware of a disturbing email that we received recently at Coinbase. It was a ransom note demanding $20 million in Bitcoin in exchange for these attackers not releasing some information they claim to have obtained on our customers. I'm going to respond publicly to these attackers by saying no. We are not going to pay your ransom.
And I even received a letter in the mail saying that my information was included in that hack. So I'm speaking from firsthand experience here, not just an article that I read online. So not only are you leaving free money on the table by not earning yield on your idle crypto, but you're also putting yourself at risk of losing it all, getting hacked, or having your account frozen by keeping your crypto on centralized exchanges. Because if it's not your keys, it's not your crypto. You already know this, so I don't have to tell you. You can't afford to be lazy with your capital. The US is drowning in nearly $40 trillion in debt. So this is your insurance against the system. To learn how you can earn passive income on your coins every single day while protecting your capital from hacks or scammers, my research team put together a step-by-step tutorial for you to start earning yield on your crypto today. And it takes less than 10 minutes to get set up. All you need to do is go to altcoinpro.com after you're done watching this video, create your account, and click on the Start Here lesson under the classroom, and you'll discover how one liquidity pool is earning our members up to 40% yield on digital assets that they already own. Plus, you can go into the DeFi yield picks and see even more opportunities to earn passive income on your coins safe and predictably with complete control and ownership of your assets. You will make significantly more money by being your own bank. And all you need to do is go to altcoinpro.com to get started right now.